Are you a real estate investor? You want to save on your taxes? I'm going to show you 5 key ways that you can save on your taxes thanks to real estate. That's today's episode. Let's get to it. Hey everyone, I'm Clayton Morris, longtime real estate investor, founder of Morris Invest. This show is devoted to helping you create passive income and creating financial freedom. I don't care about real estate. Yes, that's the vehicle that we use to get there. What I care about is allowing you to create more space in your life. If you want to spend more time with your kids, you don't want to commute to and from work anymore, you want to be on vacation, and you want to have passive income coming in every month from your rental properties. That's what we want to teach you on this channel. Financial education, that's what we want to teach you. And today we're going to teach you 5 ways in which this new tax law is already benefiting us as real estate investors. So get out your pad of paper and pen, because I'm going to dive into some really great areas, if you're not familiar with this new tax law, how it can benefit you. Number 1 is the corporate tax rate. It has now been reduced significantly. What does that mean? What is the corporate tax rate? Well, it's the rate at which businesses are taxed. You often hear Warren Buffett talk about the fact that he is taxed less than his secretary. That's true. His secretary, as a W-2 employee who works for him at Berkshire Hathaway, actually is taxed at a higher tax rate than a business. And now, under the new tax law, corporate tax rates have dropped to 21%. This is an enormous cut in the corporate tax rate and the way in which a business is billed. For many, many years, corporations were crying about the fact that you could go to Ireland, you could go to other parts of the European Union, you could go to Australia and New Zealand and be taxed at a much lower rate. That's why all these companies, Apple, Google, and others, were putting corporate headquarters or corporate offices in places like Ireland, because they could then offshore so much of their money. Well, guess what? The United States would like to have some of that money come back. And this, according to the tax experts, could be a boon for businesses to come back to the United States. Having more of the infrastructure back here at home, hiring individuals here at home. Think about Airbus, for instance, moving that headquarters perhaps to North Carolina, moving it out of Europe here back home so that we could create thousands of jobs. But they would also save a boatload of money. It makes them really competitive with the world. So a 21% tax rate, that is perhaps the biggest winner overall. Corporations being slashed down from 35%. Think about that savings, 35% to 21%. So as a corporation who invests in real estate, you just got a boatload of savings. So now you might be new to the channel, and you might not be familiar with how we invest in real estate here at Morris Invest. We have businesses that invest in real estate. I, Clayton, do not invest in real estate in my own name. That would be a road to ruin. And we have a lot of videos here and resources here on the channel for you to be able to reach out and click on to be able to learn more about the best entities to buy real estate investing and all of that. So please check those resources out. We will be happy to help you go deeper into those structures and how to best set those up. I personally use LLCs, limited liability companies, right? Limited liability corporations to own my real estate. That's a company, that's a corporation. And guess what? I now have the benefit of this tax overhaul, the way in which my business is taxed. So my business owns the real estate, the cash flow from the tenants comes into that business, and guess what? Now that corporate tax rate way lower than it would have been if Clayton Morris owned that property. If I just owned that property and I took $700 from the tenant, thank you very much, guess what? Now I'm taxed at like 35%. I'm taxed way higher as an individual than I would be as a corporation. That, my friends, is financial intelligence. That, my friends, is how we buy real estate. We buy them in an entity. Okay? Please remember that. We buy real estate in a legal entity. There's a whole bunch of different ways to do that. Number 2, small businesses. They're getting a 20% deduction now on pass-through income. Now, small businesses and guess what? Ding, 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 real estate investors. So if you're a small business, great. You now, and you have a passive business, now you get to have that benefit of that 20% deduction. So this was one of those things that was worked into the tax bill literally the night before. Like the night before, real estate investors had now been asking for, they've been asking for this deduction for a long time, this pass-through deduction, because oil and gas industry has had it for a long time, but real estate investors did not. Now we get it, a 20% deduction that we can now claim passively as that money flows through. So professional services companies like doctors and lawyers and accountants will only get that 20% of that deduction if their income is less than $157,000 a year. However, real estate investors get a 20% pass-through deduction on that income. Another reason to be a real estate investor. I've been, how many times do I have to pound the wall to tell you? But that additional incentive now in the tax code, a 20% deduction, is absolutely killer. I frankly cannot wait to see what my taxes look like next year. It's gonna be a total change. We're talking like tens of thousands of dollars in savings just because of this switch in the tax code. Number 3 on the list is business equipment deductions. Now, Section 179 has now been shifted to allow residential properties. So now guess what? Roofs, HVAC units, fire alarms, security devices, those additional improvements, those additional items for my business can now be written off under the new tax law. So business equipment has always been, computers and machinery. Now these standard deductions, these depreciations can now exceed to things like roofs, HVAC systems, and additional items. So again, the IRS saying, hey, why don't we just make it more broad? Why don't we dive a little deeper into some of the areas where people are having to depreciate roofs and those extra items inside of a company? These are powerful tools for you to be able to use in your arsenal of depreciation and taxes. Like I always say, if you're a real estate investor, you should not be paying anything in taxes. If you do it properly, you do it legally, and you do it according to the tax code, you shouldn't be paying anything. That's the bottom line. And there's so many incentives like this, the 179 deduction, that are in there now. And you can dive much deeper into the 179 if you want to see all the nuances. It's dense. It's very dense. But dive into it so you can get a better sense if it's right for your business, or if you're a real estate investor, how this could affect your holdings. Number 4, your children. Do you have children? Are you thinking about having children? Guess what? Good news. Good news. You can now hire them as an employee. Now, I love this. So you can have even little children, doesn't even matter how old they are, they can work for your company. And they have to, they can't be doing all kinds of crazy manual labor. We have child labor laws in this country. But they can now, parents who hire children can get that deduction up to $12,000. So children who work for their parents' company, or any other company for that matter, can now earn up to $12,000. Well, where's that money going to come from? That's going to come from you, the company, right? So your company, ABC Linoleum, is now going to hire the children to be, pictures in the store, on greeting cards that are sent out, or mail and advertising. Right? So maybe you have your children are photographed and they're part of the advertising campaign for ABC Linoleum in Kansas, Kansas City. Who cares, right? And they're part of they work for you. They had to do a photo shoot. They are now part of the face of this company. Maybe they come in on the weekends and they help to clean up the retail store. Maybe they are responsible for helping loading some boxes off the truck. Maybe they help shred some documents. You get big piles of paper and you want to shred that stuff, have them put it through the shredder as an employee, right? They have to do a reasonable amount of work to be considered an employee, and dive deeper into the tax code to learn more about that. But guess what? One child up to $12,000. So we have 3 children, right? And it's doubled from where it used to be. It used to be $6,000. Now it's up to $12,000. So that's $36,000 that now can come off of our business's bottom line, that we are not then being taxed on because we are paying our children who are employees of the company. Right? So if you're a real estate investor and you've got a business, and you set up your business as a real estate investment company, maybe they come out and help look at properties with you. Maybe you spend some time looking at and drawing up samples of construction on the internet. I mean, who knows what it is? You can get creative about this, but make sure they're actually a part of the company. We use our children in a lot of different videos. We have them doing some office work with my wife, some documents and shredding of it, putting things together, putting stamps on envelopes and mailing out different things. So our kids are working, and you can pay them that. And guess what? That $12,000 per child comes off of your bottom line. So again, thinking like a business owner. As a real estate investor who owns an entity, you are a business owner. Think of it that way. And number 5 on the list is the estate tax. Now, this is great because almost everyone can now leave their money, their assets to their children and not have to pay a huge estate tax on that money and that transfer. Now, real estate has always been great in this regard, right? Because if you've done like a 1031 exchange, by the way, I've got a whole series of videos on 1031 exchange and what that looks like. But as a 1031 exchange, you transfer that down to your heirs, and then they decide to sell it after you pass away for some reason, instead of keeping it for the cash flow, which would be crazy. I don't know why they would, but they decide to sell it. Well, guess what? Then they are only then taxed on the capital gains from the original value transfer way back. Maybe you did a 1031 exchange like 4 or 5 times. So your children have always had that benefit. But now, the estate tax exclusion has increased from 5 million, if you're a single person, 5 million up to 10 million. And if you're married, it's 10 million to 20 million. So just a huge increase for those people who want to leave money to their heirs. As a real estate investor, when you're buying 10, 15, 30, 50, 60, 70, 100 properties, you're building an estate. You're building a dynasty. You should be able to protect it. And now, under this new law, the handoff to your legacy, to your dynasty, is now protected in a way that it wasn't before. Additional benefits if you're a real estate investor and that estate being handed down to your kids. So those are 5 key ways that if you're a real estate investor under this new tax law, you are going to do really well. Set yourself up as a business. The passive deduction of 20% now deducted. That's amazing to offset your other income. Being able to have children in your family as employees of your company. And you know how many kids you have. You don't have to keep cranking out kids if you don't want to, but my God, $12,000 per child now is that deduction if they work for you. Some killer strategies here. That's why if you really embrace the tax law and you understand that the tax law is written to benefit you, not to hurt you, it incentivizes you to become wealthy, then the sky is the limit. Once you start sinking your teeth into this stuff, man, your brain just starts going in all kinds of exciting and creative ways. So that's what it does in our family anyway. We sit around the dinner table and talk about this stuff. So I hope that you will be excited about it, for you to go out there and take action, become a real estate investor. I believe it's the number 1 way to build wealth. And if you're looking to book a call with our team at Morris Invest, we would love to talk with you about picking up rental properties. We help thousands of people around the world do it. All you need to do is go to our website, click on the Book a Call tab right there. Little 8 questions will pop up like, hey, what's your name? What's your email address? What's the phone number that we can call you? And tell us a little bit about yourself, and then we will pick the best time to jump on the phone with us. It's that simple to do. And we look forward to talking with you about rental real estate. Until next time, everyone, go out there, take action, become a real estate investor, and we'll see you back here on the show. Have a great one.